Welcome to Landco. Today we're going to talk about return measurement, which is another, in my view, very misunderstood element in the real estate business. We hear all the time about particular lofty ranges of IRR, return on capital, and what have you. And I'd like to try to, in a few minutes, unravel some of the mystery there and restate some of the important points to consider when making decisions. Real estate really is not that different than any other business. I think of it always as money going into something and money coming out of something and the timing in between. Of course, we have cash flow considerations, the actual money invested and the actual money brought out to the investor at the end of the deal that are the key elements to understand when determining what real return to the investor is. A couple of sidebars to that. Opportunity costs. Always ask what it is my money can be doing in a particular investment, or as importantly, if not more importantly, what am I foregoing with that investment by making a decision to go a certain route. It's the opportunity cost. How much is it going to cost me to tie my money up for that period of time? And secondly, what is the return coming from in our investment? Are we banking on a big sale at the end of a particular duration and lots of profit from that sale? Or are we looking for cash flow that's coming out regularly through the course of ownership of a particular asset? Or is it some sort of a combination of the two? And when we can analyze that closely enough, we begin to understand how much of the return is coming from cash flow and how much of the return is coming from that capital event or perhaps a refinancing event somewhere midstream between our ownership duration. Very important to understand that because the markets moving in various directions feed those aspects of our return differently. So keep an eye closely on return sensitivity. I would say that as importantly, if not more importantly in some cases, is the analysis of fees associated with particular real estate investments. There are fees for placement, there is fees for debt and equity placement, there are fees for running assets, property management fees, all kinds of fees associated with different aspects of services that are oftentimes unknown or at least not immediately disclosed in real estate. So it's important to think about all of those other fees that sometimes aren't discussed when we talk in terms of returns. What are the returns after fees? Those are the questions that need to be asked. So I think the takeaway in all of this is let's not be too eager to jump at what's told is going to be a return on a particular investment until we take the time to actually unwrap the package and understand exactly what's going in and how much is coming out of the investment before the investment dollars are actually making their way back into our pockets, which is really the return that you're looking for. That is the question. And these are some important things to consider with respect to return measurement. Thank you.